Hello and welcome to Dukascopy TV for an interview on the New Zealand dollar and the main issues of the day affecting the country's economy. On the line is Antje Praefcke, Senior FX Strategist at Commerzbank in Frankfurt. So Antje, we saw the NZ dollar fall after clear support was given to the gradual slowing down of the Federal Reserve's bond buying programme. But this isn't the only event affecting New Zealand's currency. There's a bubbling housing market over there, isn't there?
I wouldn't say it's a bubbling housing market yet. We don't see a bubble, but the New Zealand Central Bank, the RBNZ, has been worried about the increase in house prices for the last couple of months already. We had an acceleration of this development after the big earthquakes we had 3 years ago. And it's sure that in the statements over the last month, the RBNZ has always hinted to the fact that house prices are rising too fast in New Zealand.
So apart from the New Zealand Reserve Bank tightening home lending, what else needs to be done to reduce house prices in New Zealand? And what could happen to the New Zealand dollar if the NZRB continues to restrict home lending?
You're right. The New Zealand Reserve Bank just increased or restricted new residential mortgage lending at a loan-to-value ratio of over 80% to no more than 10% for the dollar value of their new housing lending flows, meaning that banks are now restricted in their new, I would say, higher risk lending. That's the first step they took. The RBNZ knows that you have other mechanisms to help restrain housing demand. For instance, you could raise the official cash rate, the key rate. However, they say this would not feed directly through into higher mortgage rates. And moreover, at the moment, there is no concern on CPI inflation data, meaning that inflation remains currently below the 1 to 3% inflation target. So increasing the policy rate would mean that actually New Zealand dollar would appreciate sharply, and that would put further pressure on New Zealand's export and import competing industry. So they know that they have other means they could implement to reduce this rising house price inflation, but they know for the moment it's the main mechanism is regulation and not playing on the key rate.
Just how heavy do you think the New Zealand dollar could become then?
Well, actually, I think for the moment it has another weight, another burden to carry, which is, I would say, subdued or even bad sentiment in Asian markets. So we have two effects weighing on the New Zealand dollar. I think, however, that this will kind of like abate somewhat over the next couple of weeks, and I expect the Kiwi dollar to trade against the US dollar around 0.77 towards the year end, because basically it's still a quite good economy. We have strong internal demand, we have construction being well supported and investment being supported. So overall, the situation should stabilize for the New Zealand dollar over the next coming weeks.
I mean, the New Zealand economy, some would argue, is doing better than the Australian economy, for instance, but it's still not rosy given the issues with China at the moment. I mean, do you expect the Reserve Bank to change the interest rates at all in the coming weeks in light of what's happening in the country?
Actually, you're right. China is still a big issue for New Zealand. However, we have just seen the flash HSBC PMI being again above the 50, so the expansion level, abating fears somewhat. And it's going to be important to see how China will develop over the next couple of weeks and months. However, we think we're going to have reached a trough in the Chinese slowdown. So we think things will stabilize there as well. We don't see a collapse. So we don't have this, I would say, strong dynamic momentum that we have seen over the last years, but it's going to remain a strong supporting factor for the New Zealand economy. Due to this fact and the fact that the New Zealand Reserve Bank knows that house price inflation will continue, we do not expect any rate cuts over the next couple of weeks and months, not until year end at least. It's in July, the RBNZ confirmed the outlook for a stable key rate until the end of 2013, but adopted a slightly hawkish bias. The best I could imagine in case we're going to see disappointing, not collapsing, but disappointing Chinese data would be that they postpone this hawkish bias even later to later period in time next year. So overall, I expect continued low rates in New Zealand, but no rate cuts.
So what's next for New Zealand's economy as we enter the third quarter?
We think it's going to stabilize somewhat. We have had overall, like in the world, a very slow first half of the year, and that's going to pick up in the second half of the year without having horrendous, surprising growth rates.
Okay, thank you, Antje, for your expertise there on New Zealand and its currency, the dollar. I'll be back tomorrow with a look at the anticipated UK GDP data, but for now, I'll see you soon.